find your way back home.
What's up, everybody? Welcome back to the Eat Sleep Profit YouTube channel. Just a little update on everything. We're moving everything over from the Skype to the Discord channel. So first off, shout out to Michael. He completely set up the Discord for me. Big shout out to this guy. But we're moving everything over from Skype to Discord, so we're going to be able to have all our streams there, voice channels. The chat is going to be on there as well. So it's a little bit better setup. I mean, Skype was getting a little bit too dated for me. So big shout out to Michael for setting that up. But in today's video, what I want to go over is really what is going to be the top 5 mistakes that people make while trading and really how to fix them, because I've made these mistakes myself as well. So how did I get around these mistakes and how do I learn to fix them? This is what I want to go through in today's video. So this is going to be a little something a little bit lighter than the previous videos. I don't want to keep this a little bit too long, but especially you can just skip up and go through everything else like that, especially if you see something that you usually have trouble with. You're going to be able to especially pinpoint that and just my advice on how to fix those areas. But first off, kind of number 5 and really something that's happens a lot, especially with newcomer traders, is whenever they enter into positions, they do not calculate the risk. So not calculating risk is a very, very big problem whenever you're first starting to trade, and this can really lead to a lot of big losses later on. But usually what the symptoms are is you're entering positions without a level of risk. So you do not know what risk level you're really risking off of on the stock. So especially if you enter into a position at a certain price, you don't know how much you're willing to for the price to go down before you're willing to exit. So the potential loss percentage as well, you're not calculating that as well. So how I usually only like to risk no more than 5%. You're not even looking at that at all. So especially sometimes you may enter into a position, you may be even risking 10 or 12% on the downside just by entering that position at that specific time. Now, a lot of times what this is going to do is this is going to lead to a lot of big losses, even with small positions that you enter. So even whenever I first started, I took a $750 loss on a $1,500 position. So losing half of my money on a position. How does that happen? Is whenever you get into a position and you do not know what you're willing to risk off of, and a lot of just especially not being very, very disciplined as well, that can lead to a huge spiral downhill. But how you want to fix that and how I fix that is you want to risk off the nearest level of support. And what I mean by that is, especially whenever you're looking to enter into a trade, what is the nearest level of support for that stock? So where's the nearest level that the buyers are very, very strong? This is an area that you can risk off of, because you know if the stock goes below that point, it's going to cause a breakdown, stock is going to tumble, and I'm looking to get out way before that. So what I'm look to do is I want to risk off of the nearest level of support. Now you also want to measure the potential percentage of loss. So this keeps you in a very, very good risk reward ratio as well. So whenever I look at my entry price, wherever the nearest level of support is, if you use Thinkorswim, I'll just add a trend line. I'll add a trend line from my entry price down to that nearest level of support, and it'll give you the percentages on near your cursor. So it'll say 4%, 5%, this and that. Usually what I don't like to risk over 5%. So that's just me. As well, especially with the smaller accounts, you can risk a little bit more, but especially with my size, usually the amount of size that I'm jumping into trades, if I risk more than 5%, I'm willing to lose 700, 1,000, 1,200 bucks or so, depending on the amount of size that I go into these stocks. So even though $1,200 of a loss really won't, I mean, it still hurts, but it's not going to like hurt me, but at the same time, it's still the psychological effects are going to be there. So especially if you take a $500, $1,000, $1,200 loss, I mean, this may sound very, very huge to these guys, but I mean, once you grow your accounts, I mean, these losses are just going to happen. I mean, this is just the risk of trading in general, but there's gonna have big psychological effects on you. So me personally, I don't like to risk over 5%. Anything 5% and below, I like to use that as the nearest level of support, and that's pretty much how it goes. And you can see here with this chart here on OCRX, especially if I'm getting into an entry price at 0.74, let's say looking to play that breakout, is looking like it's in a triangle pattern, that nearest level of support really off that small little pullback that you can see there is at around 0.71, 0.72. So that's really what I'm going to be risking off of, and that's going to maintain within that 5%. So especially if I'm risking off of that with a stop loss, which I'm going to get into next, the stop loss is going to kick me out, especially if that stock goes below that point. So if the stock starts to set lower lows, I'm going to exit early, and basically that trade is going to be null and void. And I will take a loss on that stock, but it's better than holding the stock as it's downtrending and taking even bigger and bigger of a loss. Now, number 4, Another commonality that I'll always see a lot of times is people not setting stop losses. So stops are going to limit the amount of potential loss that you have for a trade. So whenever you have a stop on a stock, the maximum amount you're willing to lose is going to be at that stop loss price. You can't lose more than that. Now, not all stocks are going to go green after you enter into them. So sometimes what kind of the common notion really with a lot of newer traders is right when you enter into a trade, you're going to start making profit. Then you have to look for your exit plan and this and that. But that doesn't always happen. Sometimes right after you hit that buy button and your order goes through, that stock will fall very, very quickly out of whatever reason. It could be the wrong time you bought, a bad news report can come out. I mean, anything can really happen. So the fact is you want to be very, very diligent on setting your stops and especially protecting yourself from these downward swings. And without stops, quick price swings can make for large preventable losses. So I mean, stocks can go whatever direction they really want to go. Even if you see a good pattern, the stock can still go red. So you really want to protect yourself against that. And the ways that I do that is right after I enter into a position, I create my stops. So right after I buy and that order goes through and I can see that I have my average position, however many shares are sold, and I'm looking at that on the active trader. Right from there, boom, I'm setting up the stop at my nearest level of support or within that range. Anything less than 5%, I'm going to be looking to set a stop there. You want to set your stops at near support or just below. Sometimes why I say it's just below the near support is sometimes some stocks like to bounce off the near support before they look to break out. So if you have your stops very, very tight, a lot of times they can trip off preemptively right before a breakout happens. And that's going to be like the ultimate punch to the gut, especially if you lose on a trade that goes green for you. So that could be a lot of common mistake that happens, as well as want to put your stop losses like right at the bottom of support or just a little bit below that, just so the stock has some breathing room, and make sure it's still within that 5%. As well as the stock is gaining on the day, if you enter into that trade and it keeps on going green, even though you have a stop loss, you don't have to keep the stop loss at that area of loss. You can slowly move it up, where if your entry price is 0.74 and your stop loss, let's say now it's at 0.80 and the stock is at 0.90, worst case scenario, you're going to exit at 0.80 and you're actually going to make a 8% profit or so. So that's one thing to always note on that. So the place I would put my stop losses, if you're looking at this chart here, I would put that at the nearest level of support. And as the stock continues to gain on the day, I would slowly move up my stop losses, let's say in 5 cent per share increments behind the current stock price. They call that a trailing stop. I don't like to use trailing stop orders because you're letting the computer do that. I like to kind of maneuver it myself just because I kind of trust my own intuition. And that's just pretty much how it goes. But overall, this is really how I like to use my stop losses and why you should use your stop losses. Now, number 3. This is a big problem too, and it was a big problem for me when I first started off, is trading too much capital. Now, you overutilizing your account size per trade is always going to be the worst thing to do, because it opens you for a lot of shots to happen if the stock was to go against you, and you're going to lose a lot of money, and it's not a good situation overall. A lot of times some people risk more than 50% of their account size per trade, or if the trade requires you to let's say, for example, the trade you want to get into, it's too expensive, then they start to leverage and things like that, and it's just a huge downhill spiral a lot of times. Personally, I don't leverage just because I know if I don't have the capital to trade that stock with the amount of shares that I want, I shouldn't be trading that stock to begin with. So I need to start with a lower price range or move to a lower amount of shares. Do that, work your way up. If you trade consistently and profitably, your accounts will grow, and as your accounts grow, you get to go after the bigger and bigger trades. That's how it goes. You don't want to jump ahead too far too quickly. And as well, kind of the side effects of that is when you trade with too much capital is you're very, very stressful with every candlestick move. And this is something that a lot of newbie traders can relate to, especially whenever you're watching the 1 minute on these stocks and the stock is moving up 2 cents here or down 2 cents. You're ready to sell or you're ready to exit this and that. You're just sweating like crazy. I mean, I had that same problem too. That just means you're trading too much capital, especially in that position. If you're not willing to take a 5% or even a 10% loss on that stock, and you can be mentally okay with it, if you can't, that means you're trading too much capital, in my opinion. That's really how it goes. So with me, I don't want to trade no more than 50% of your account size per trade as you first start off. And what I mean by that is a lot of times not everybody has the capital to start trading out of PDT, let's say 25,000 plus. So kind of the common rule is don't trade more than 10% of your account. Now, if you have 25K, that just means you can't trade more than $2,500 per position, but not everybody can start with that amount. So some people have to start with, let's say, 1,000, 1,200, 1,500, or whatever. So with that, if you're only trading 10%, you're only gonna be trading $150 maximum, which means you're not gonna make any profit off of anything, rarely past commissions. So with that, I usually like to bump it up to no more than 50% as you first start off, but as your account grows and grows, you want to scale back to like 40%, 30%, 20%, 10%, etc., until the point where you're out of PDT, where you can just trade 10% like it's pretty much nothing. Now, only trade capital you're willing to lose, and I see a lot of problem with this as well. Is people are trading capital that this is kind of their last ditch effort at like making money and things like that. So you never want to put yourself in that situation, because it adds way too many emotional variables into play, where you're just not going to be trading at your optimal state of mind. So especially only trade with extra capital that you have that you're willing to lose. So especially if I look at my trade that I enter, right, let's say for example at this moment, and I'm looking at it and I see that whatever amount it is, if I lose that amount right there, will I still be mentally sane? If I will be, and everything is going to be all right, and I'm just going to be looking to kind of better myself afterwards, or look to make a better trade, if you're mentally prepared to lose that money and you're going to be all right, then that's going to be the amount that you're willing to trade with. If it's ever past that, if you ever take a loss on that stock and you're going to lose your mind, then nah, you should not be trading with that amount of capital. And that's really how it goes. You want to take care of your mental health first before looking to make any type of profits in the stock market. Now, number two, and this is something that I see not too often, but it's one of those things where some people are just trying to get way too ahead, especially for where they're at. And a lot of times this leads to not having a strategy. So some people, they want to trade every single stock, every single pattern, every single time. So what this means is every single stock that starts to move, whether it's a $200 per share stock, a $5 per share stock, or a micro penny stock, they want to trade anything that's so-called profitable. They're looking at every single pattern available. Like a lot of times, a lot of people like to share those spreadsheets of all the patterns that there are to trade and be profitable with. I understand that, there's a lot of patterns out there that can be profitable, but you have to be so good at one pattern to really be consistently profitable that it's very, very hard to really have 20 patterns in your, let's say, for example, in your head that you can go to really at a moment's notice and make a good profit off of. So a lot of times it's a lot of people want to see like really a lot of times it's a lot of people become a jack of all trades and master of none. So what this saying is, it's you kind of know how to trade those patterns. You're very, very, not that you're very, very good at them. It's just you know what they are. You kind of know where your entry points are supposed to be, your exit points are supposed to be, etc. But you're not the master of it. You're not very, 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 very good at it, where to the point where it's like second nature. You still have to kind of pull reference to these little pattern sheets and things like that. Whenever I'm trading, I have nothing in front of me. I don't have any books in front of me. I don't have any study sheets in front of me. I don't have any sticky notes in front of me. It's all pretty much second nature. And that's really going to be the point where you know that you know what you're doing, in a sense, is whenever it becomes second nature. Especially with me, the routine. I don't have to write down a routine and this and that. I know exactly what I want to do. Right when I wake up, breakfast, brush my teeth. From there, open Thinkorswim usually is going to be around 30 minutes before the market opens. I'm looking at my pre-market scans, any stocks above 15% in gains, looking for their news reports accompanied to that. Once I have that set watch list on my pre-market, I'm waiting for the stocks to open on the day. I don't want to buy right out of the gate. From there, right after the stocks have opened on the day, I'll run another scan for the intraday to see any stocks that are starting to move, not in the pre-market, but in the intraday as well. Wait for the patterns to set up. Once the patterns start to set up, I'm looking for my entries and exits. Pretty much what I do every single morning. And then after the first hour of trading, I sit back, come back towards 12 o'clock to see, usually around lunchtime, to see if any trades start to spark up again. From there, if they don't, I sit back, come back near the last hour of trading, see any stocks want to run up into the close, to see any stocks to hold overnight. If anything isn't happening in that area, I'm just waiting for the next day. And that's pretty much how it goes. So you really have to have a routine overall. So really my recommendation for this is find 1 or 2 patterns and stick with them. My 1 or 2 patterns, really my 2 patterns that I like to go to, and my go-to patterns that I know everything and I'm just very, very proficient at it, is ascending triangles and flat top breakouts. On the long side, that's pretty much my go-to every single morning, every single day within the first hour of trading. That's what I always call out. That's always the trades I go after, and I'm very, very consistent with those. You have to develop a routine and a strategy. So if you don't have a routine, if you're very, very sporadic, but what you do, it's very, very hard to diagnose any issues that you have. So, and also once you found consistency and profit, then you can move to the next. So what I mean by that is if you find consistency and profit within, like, let's say ascending triangle, then once you have that ascending triangle pretty much down in the bag, then you can move to the next pattern, and then you can move to the next pattern. And once you found very, very consistency, let's say in penny stocks themselves, then you can move to, let's say, the next area. Let's move to the higher cap stocks. Let's move to like Apple, Netflix, things like that. Let's move to options. Let's do this. Don't try to do 5 or 10 different style of trading at once, just because it's going to be very, very hard to become very, very proficient at one side if the other side requires you to study and do things like that and do that for that side. So it's just, you want to focus on one thing, get very good at it, and move to the next. You just want to be disciplined like that. Now, the number one area of trading, and the number one kind of just topic altogether that I see that a lot of new traders get it wrong, and just really how to fix it, is it's really thinking that trading is easy. And trading, to me, it's going to be one of the hardest things you're going to do, and you're going to have all the odds against you. But for some reason, it's going to be the most addicting thing you ever do in your whole life. So first off, I used to just, I guess, think about it as well, and especially with people that used to talk to me and like, hey man, I'm having this trouble in trading and this and that, and how should I fix it? I always have kind of the mindset of like, if I can do it, I know for definitely these people can do it too. Because I don't see myself as some special guy out there doing this and that. A lot of people think I'm just like a godsend or whatever. Like, and I don't really see that at all. I just see it like I'm just a person just pretty much spreading my ideas and really what I did at trading to pretty much get to this point. But as well, even when I think about that, is not everybody's may have the same level of I guess discipline that I have, or are willing to build a routine, or willing to especially be very, very focused on a specific subject. I mean, a lot of it can be attested to. I mean, I'm a person, I don't have any kids and this and that. I have a lot of free time, especially since I day trade full time, where I can have big, long expanses of like 5 hours where I just study and I just look at patterns and I look at charts and look at my trading and analyze my trade logs and look for this and that. A lot of people don't have that luxury. So as well, it's going to be even harder for them to do that. So if I can do it, can they do it? Yes, but at the same time, you have to be willing to put in the same amount of work. That's the only way. Also, too, is what I see is a lack of studying. Some people think trading is easy, and a lot of times I mean, especially with how the market is now, and a lot of big scandals that have happened, a lot of people prey on people that think trading is very, very easy. You can think about the whole big connect scenario where you have a lot of people just going into trading. Oh, it's just easy. You just do this and that, and you're going to get 1% every single day. And especially 1% every day equals like 13,000% compounded, especially at the end of the year. So if you're turning like $1,000 into like 1.3 million at the end of the year, I mean, that's not a sustainable scenario. So that's really much what the whole big connect thing was, and how a lot of people lost a lot of money on that. So it's not based on crypto. It's just BitConnect itself is pretty much a scam that went on. But a lot of people would have saved money if they would have studied and see, hey, this is unsustainable, this and that. I'm like, you can actually learn that, especially just being very, very proficient at finance. Especially if you're going into the finance industry, especially in trading or investing and things like that, you want to know the background. Don't just, if you're very, very naive at this area, I mean, people will want to take advantage of you. So my main thing is to study hard, especially if you don't know terms like, I mean, this may be even simple terms for a lot of people here, but if you don't know what the float of a stock is, the spread, intraday, catalyst, what is a market maker, support and resistance, this may be very, very simple for a lot of people, but if you don't know that, if you do not know what that entails, in a sense, you still have some studying to do. And as well, what I see sometimes is there's no effort for self-improvement. So whenever you take a loss on a stock, you just want to blame it on, oh, the stock was just being stupid, or this and that, or it was because of this, or my orders got wrong. Like, I mean, you have to be able to improve yourself day by day. It's a constant learning process. You may be profitable for 2 months, But after those 2 months, when the market slowly starts to change, I mean, the market is an ever-changing beast. So after those 2 months, if the market slowly starts to change, will you be profitable this next 2 months? Will you be profitable a year from now, 2 years from now, 3 years from now? So that's the whole thing. It's not about the people that start to make the profit initially. It's really the main thing about, can you be profitable over a year span, or 2 years, or 3 years, or especially 4 years, 5 years, keep on going down the road. So all that, it has to be built on self-improvement every single day, looking to get better and better and better, and especially looking to correct mistakes that you've made during that day, and look to correct them the next day. And the ways to especially improve on this and to fix this is to just study. You really have to know all the ins and outs of trading. So especially don't let studying lead you down a road where you start to just especially just learn everything. I mean, just stick to a specific side of trading that you want to do, especially let's say like on the long side, or shorting, or this and that, or just trading in general, just day trading. Learn everything about it, learn the patterns, learn especially entries and exits, how to use your orders, things of that. This is what I teach for a lot of people, just pretty much a lot of the ins and outs just to begin with, before I go over like the in-depth strategies. But just, you got to know really the ins and outs before you want to get a little bit more in depth with it. As well, log your trades and analyze them. What I used to do, especially when I first started, is all I would do was just log my trades, and I would record my screen as I'm trading, and I would look at that and analyze what I did. Because a lot of times as you're trading, it may seem like this is the perfect scenario, this is the perfect entry and exit, but whenever you record that and you sit back and play back to yourself, you're going to be looking at it like, this is the dumbest thing I could ever done in my whole life. So the fact is, you have to be able to analyze your trades any way possible, and look to that to improve yourself. So if you see yourself losing at a specific time of day, don't trade at that time of day, trade at a different time of day. If you see yourself losing whenever you buy at this certain level, or do this and that, you want to kind of see that trend and want to correct that. And also, as well as, ignorance is no excuse. So if you lose on a trade because you didn't know that market orders did this and limit orders did that, or if you didn't know how level 2 works, or you didn't know how time and sales works, things like that, that's still no excuse. I mean, you really can't get no refunds, especially in the market. If you take a loss just because you didn't know anything, you can't really, well, can I get my money back? No, it doesn't work like that. So you want to know everything in advance before you look to trade. So that's why a lot of times I tell a lot of students that especially work through with me, is before you even create your first order to enter into a lot of these trades, I usually just test them on a lot of different theory, test them on especially a lot of the subjects of trading, to make sure you're proficient enough to get into these stocks and trade them and know what you're doing. And especially from there, and then you get to grow, build, and especially grow your accounts and go from there and just go to a higher and higher level. So at the end of the day, ignorance is going to be no excuse. But overall, this is going to be the top 5 mistakes that I see that especially new traders make, and this is really going to be how to fix them. So if you see yourself fall into any one of these categories, I hope this helped, especially to give you some form of insight, some form of rubric to help you to especially correct those mistakes that have been made, and sooner or later become profitable, or even if you are profitable, to become even more profitable. I mean, there's always room for improvement. People will see me and like, oh, you must be a perfect trader and things like no, I make so many mistakes day by day and day in and day out. And I look at that whenever I record my trades, I'm just like, I did the stupidest thing ever. So even with that, there's always going to be areas to improve. If you make 5% on the trade and the trade goes up 100%, you still got some area to improve on that. So, I mean, there's still more and more profit to be made. So all in all, this is me, Jay from Easily Profit, signing off. Hope this helped a lot of you guys out there. If it did, if you guys really still want more videos like this, I think the next videos I want to do is probably going to be going over level 2 and what I like to look for, and kind of how it's set up and what to look for in your trades as well. Maybe be throwing some live trades in there, just so you guys have a notion of how I trade, and just kind of showing you guys some proof. A lot of people are like, hey, I want to see your trading and things like that. I'll just go throw that in there. So no problem. So Jay from Easily Profit. If you guys have any questions, you can always email me this and that. If you guys want to know about what I do, things like that. So Jay from Easily Profit, signing off.